Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 3rd, 2017. I wanted to do a video on the solar stocks. I think there's some important technical developments worth noting. And before I get into the charts, I just wanted to cover a couple points. What prompted me to do this video was a couple of replies from member at Murphy Doc within the trading room. Murphy Doc had asked my opinion last night on SEDG, one of the recent trade ideas in the solar sector, as well as another follow-up post on SPWR, one of the other solars. So I wanted to thank Murphy Doc for that, and I wanted to say this: I really appreciate all these inquiries of the members in the trading room. It actually helps me in my trading and my analysis. Part of Right Side of the Chart, or at least part of my trading style, is if you can chart it and trade it, it is game. Meaning I follow the U.S. stock markets. Within the U.S. stock markets, you have various industries. Within those industries, you have sectors, subsectors. Then you have the global equity markets. I try to follow all the international markets. Various industries and sectors, as I said. Then there's other asset classes, commodities, precious metals, fixed income, currencies, all of which I post analysis on. Now, not all of it on a regular basis. That would be nearly impossible, extremely time consuming, and more importantly, it would do what I refer to as dilute my analysis. If I put up a weekly newsletter, let's say, or daily updates on everything I just mentioned, 90% of that stuff isn't tradable at any one time. I mean, you can trade it, sure, but there's not clear bullish or bearish technicals or a pattern setting up or a strong trend worth trading. So therefore, my analysis will jump around. It's sporadic. One day I'm talking about solars left and right, and then I move off them and might not bring up the solar stocks for a year or more. So that's just wanted to say again, by the members in the trading room inquiring about these things, it often nudges me to look at a chart or a sector or something that's fallen off my radar, and then boom, I see a great trading opportunity. And that sort of brings in again why I'm doing this video. Murphy Doc inquiring about those two stocks. I'm going to get to those here in a second. And then the other point I wanted to mention is, my trading style is often quite contrary. In other words, I'm buying when nobody wants to buy a certain stock or sector, and I'm selling when everybody else wants in. There's technical developments and chart patterns. My style is largely involved in looking at technical developments and chart patterns that often signal major inflection points in a stock or a sector or the markets, and that often entails, calling tops and bottoms. That's not every trade. Some are continuation patterns and other things, but that's a large part of it. So keep that in mind when trading, these trade ideas that a lot of times you're looking at trade ideas, long side trade ideas and something that's in a vicious bear market or an extended bear market. And likewise, something might be in a strong uptrend, and I'm making a case for a reversal in that stock. So if that's not your cup of tea, there are continuation patterns. There's more stable, steady Eddie ideas, the growth and income trades. So again, I just wanted to get all that out there. And then finally, as I'm going through all these side notes here, remember there's an option when you watch these videos. You can even play it off the site. You don't have to go to YouTube. I incorrectly stated that the other day. Just go to the bottom of the video, click that settings cog, and then you can increase the speed anywhere up to as fast as 2 times playback speed. Therefore, you can whip through these videos a lot quicker, slow the speed down, or pause it on a sector or stock that you're interested in, and it'll allow you to get through a 15-minute video in half the time if you want. All right, with that being said, let's dive into the charts. Okay, the reason for this video and my response to Murphy Doc, let's start with the two that Murphy Doc inquired about, SEDG, last night. Asking if it was a buy, and obviously it was a buy, but this must have been an earnings-induced gap. I think Murphy Doc might have mentioned that they had better than expected earnings, so there's a big gap there. But from my opinion in the question, my response was no, it was not a buy, because we are at resistance. Sometimes stocks will take out resistance, sometimes bearish chart patterns don't play out. Sometimes bullish chart patterns don't play out. But when I look back in time, I see all these reactions, and I see a stock that was at resistance. Now it gapped up, clearly took out that resistance. And you can see these are lines I had on this chart going back for many months. This is the next resistance level, a super solid resistance level. So, you know, would you have gone long? It would not have been objective to go long at resistance. I'm assuming this is an earnings-induced gap or at least some type of news event. 20% gap up, you can't chase that, and it's a gap up almost into resistance. So here's a stock that I see very little upside, and I would put a very high probability that if it pushes up another less than 4%, that's it. The stock will, at the very least, consolidate and more likely pull back. And then you can maybe recycle in down here. So this one's looking to be a short soon, despite this big gap up today, because that is just a solid resistance level. So again, it's all about risk reward. Yeah, I also mentioned in there last night, you know, it's not just because it was at resistance and overbought that didn't make it a short. This is the a trend line here. This is a price channel, ascending price channel, and this would be if and when it takes out this trend line. Now I have to extend that trend line a bit if I can move it here. Every time you try to grab a trend line, if it's touching another one, it'll highlight that. So there it is. This one has a ways to go, and there's if you're bullish on it, stock, your objective entry would be to come in back here, let it work off the overbought conditions, power up, and ultimately break through there, and then that's a bullish breakout. But it needs to consolidate first. The stock is just too overbought. Okay, so that's SEDG. Now the next one was SPWR, and yeah, same question. Murphy Docket asked, hey, is this a buy on a pullback to yesterday's pullback? You can see the big red candle. This is SPWR. These were my targets before. This one was, I think, posted all the way back here, and I'll go over those charts in a second, on back in early April as one of my favorite trading ops. And I thought, if I'm not mistaken, I believe I posted it was an objective long or an aggressive long, but a possible long entry here at the bottom of the wedge. Now that stock has run up in just a few months 90%. So there's a couple things on this chart. Number one, it hit my final target. I had these targets labeled in advance, I believe, and this was a very solid resistance level. That is a huge gap. And when you see a gap of that magnitude and you see a stock that has run up 90% just to reach the bottom of that gap and has become quite oversold or overbought, on the daily time frame, at the very least you have to expect a little consolidation or pullback there. And that's what we got. So my response to Murphy Doc was he asking if it's a buy. I said yes and no. Yes, it's objective. It certainly appears to be an objective entry because this is a solid support level. You can see numerous reactions in this shaded area. So it's pulled back, and what that did, as I mentioned, in one fell swoop, it has cleared out the overbought conditions because we had such a sharp pullback yesterday. So from that, on face value, it looks like a buy or an objective long entry there with a stop below, but my answer was no. And no, I'm going to get into in a second here. That's why I'm doing an overview on the sector. I see too many of these stocks overbought at key resistance levels and or my final price targets, and as such, I think a pullback. I think the risk reward is very poor right now on the long side. So if you're still long, tighten up stops. Keep in mind that stops cannot protect you against a gap. If you had a stop here just below that T3 level, I don't know where this one opened yesterday. Well, I can tell you. Click on it. It opened at 928, so it opened down here at the bottom end of the range. So if you had a stop up there around 11, that stock opened at 928, and that's where your stop would have filled or been bypassed, depending if you had a stop loss or a stop limit order. So those are the pitfalls of trading, especially chasing high-flying overbought stocks. Same thing what's going on in the NASDAQ and a lot of these tech stocks and semis now. You're going to start to see soon these big gaps down. So those trend traders that are holding on or riding up stops, they're probably going to give back some big losses. That's just my opinion. All right, so that's SPWR. Now let's just take a look real quick at when I first started mentioning these stocks, on and off over the years I've covered this sector, but it was on April 4th, this post here, where I first started pointing it out and talking about the fact that there could be some quote unquote potentially explosive rallies following a vicious bear market in many of these stocks. Now that's exactly what happened. Let's just take a quick look. There's SPWR. I mentioned it. There it is. Aggressive traders could take a full or partial position here at the bottom of the wedge. We just looked at SPWR. That was down here at the bottom of the wedge. As I said, that was a 90% run right to my final target. There was a reason there wasn't a target listed up here. These are potential longer-term targets, but that was your opportunity to get out and not get greedy after a 90% gain and a overbought run all the way up to a gap. Next one up was, let's get rid of that chart, scroll down here, ASTI. This was, I posted a couple days ago, the last of my solars that I took profits on. I had added targets since, but let's look at that chart. That one played out, as expected. It had a bullish falling wedge pattern. It was a low price stock. It broke out, back tested. I pointed out that back test right here the day it back tested just recently, a few weeks ago. And from there, it ran up and hit this target. I had labeled these targets since several times within the trading room, 343%. Took profits there. You can see the stock pulled back the very next day. And that's just, too much too fast, and it's a low price stock, so this thing could keep going if it wants to, but I just decided to get out of that one. But point being, you can see how well technical analysis works on these charts. These were outlined months in advance, and the majority of these setups, I showed you already, okay, that's two of those ASTI, have played out exactly as expected. This one didn't do so good, I don't believe. Another low price stock. Let's see. Okay, the criteria was an impulsive break above this bullish falling wedge pattern. And we look at RGSE today. RGSE, little typo there. And we did have a breakout, but far from impulsive. This is not impulsive price action. This stock limped through. This is an impulsive candle. You want to see high volume, see these candles, high volume, impulsive candles, although they were within the wedge, they weren't breakouts. So we didn't have anything remotely close to an impulsive breakout, and that one just continued to drift sideways to slightly lower. So that is about the only one, I believe, one or two maybe highlighted back on April 4th that didn't lead to explosive, high double digits or triple digit gains. Here's SEDG. This is the other one that Murphy Doc had mentioned. I guess I posted it back as a long swing trade on September 8th, a bit early, but a tight stop. So we had a loss of 1.66%. That's where stops save you. And I posted at that time and indicated the trend was bullish, and there's the targets right there. So SEDG was at 1555. Let's see what's happened. And SEDG, right? Yep. All right, so we were somewhere around here, and that stock is now, up about 71%, although that's where, I mentioned the other day, this was my final target right here at the time, actually. So it was still good for, 15% gain, and it's worked its way up in this channel. But again, I already just covered this one a minute ago and made the case that upside it's limited. And the common theme here in the sector is there's a couple of these stocks pulling back to support. There's a couple that haven't broke out yet, but a lot of them, especially these big leading names, are either overbought and or at resistance and look ripe for a pullback. A couple more. CSIQ, Canadian Solar, breakout backtest of this large bullish falling wedge pattern confirmed with positive divergences. Here's a scenario I'd outlined, and I had this target up here. Let's take a look at that. CSIQ. And there it is. There was that backtest. And from there, that stock rallied, 55, 56%, and it hit that target level of mine. That was a very solid resistance level, or fairly solid, I should say. and you can see it did pull back. You would have had an opportunity to exit there, avoid that give back. Now the stock powered up through there and is now trading above there. So from just technically speaking, it's above support. The problem I have with this stock, you can note here, see that high when it broke out? That was a divergent high. And you guys know I put a lot of weighting into divergences. So although I probably wouldn't, well, I certainly wouldn't short this one unless it gave that level back up, but I wouldn't chase it long either. So again, on face value, it might look bullish because it broke out and it's back testing support and sitting above it. But I think this one is probably going to come in and give that support level back up, pull back. Maybe at 15, that 15, 17-ish area, I might be interested. There's some support there, but as of now, I have no desire to chase that one. All right, next up, HQCL. Let's see, this one, buy signal wasn't on that break of that line. It was a buy signal come above the 1775-ish level. That's this yellow line here. The actual line was at 1773, but I gave it a few cents of error, margin of error. I'm sorry. What was that? HQCL, right? Yeah. All right, so there it is. You can see we came up to that level, was resistance, came up again, couldn't take it out. Boom, broke out, and that is what you call an impulsive breakout. And from there, at that point, the stock rallied about 23%, came very close to that target, a little shy of it. As you guys know, I always set my sell limit orders slightly below the actual resistance level. So there was a chance to make a quick trade, get out. And again, this one on face value looks like a buy, and it may be a buy here. In fact, I'll tell you, I think it'll bounce unless the sector really comes in hard. Because what this has done is worked off the overbought conditions. You can see how overbought we were right here. We're all the way back to the 50 line on the RSI. Anything above 70 is overbought. We were overbought here. You can see the stock had to come back in. So we've worked off the overbought conditions, but that doesn't mean we can't continue lower. So again, technically speaking, if you're bullish and you want exposure to the sector, this is one of the few that look very objective to go long here around the 770 or so. We're at 772 right now with a stop somewhat below because that is a decent support level, and at the very least a bounce trade. And if you're longer term bullish, this is your next target, 980, and if it takes that out, especially since it's already visited the level a few different times, that would be quite bullish. And again, these stocks, I want to just say this, I am near-term bearish right now on the sector at this point, longer-term bullish, because these stocks, almost all of the ones that I covered, and the reason we went in back in April, is they appear to be bottoming. These are bottoming patterns. This is a long, extended downtrend, a bear market in the solars, and these across the board, I'm noticing all these bullish falling wedge and other type of bottoming patterns, and so this looks to be a sector just getting going. So again, near-term bearish, longer-term bullish on the sector. But if you reload right now on some of these at support, and the rest of especially the bigger names start coming back in, then these support levels may not hold, or at best case scenario, maybe you consolidate and it's dead money for a while until the sector works off the overbought conditions. Okay, a couple more. Let's look at, this was one of my favorites. This one was an official trade idea. It was down to 25.88. You can see where I predicted it to go. There was actually additional targets. Here's a 60-minute wedge, 60-minute chart to hone down the entry on it. And again, where was that? That was at about 26.43 at the time. FSLR. And this is one of the big leaders in the sector. So here's where we're buying it, down here at the bottom, and that stock has run about 86%. These were my targets. Each and every one of them hit. That was the original final target right here, and that's where the stock had a nice pullback. I revised it at this point to the final target, and we did pull back. We averted a big drop at that point. That was, I'm trying to measure it. Doesn't look like much on the chart. It was over 10%. And the stock continued up. Now, this is a reason that this is the reason I'm near-term bearish on the sector. there is a divergent high, very clear divergence, negative divergence. This is a rising, ascending price channel, almost a wedge type pattern, a slightly contracting channel. Very decent resistance here. You can see all these reactions here to the left. So here's a stock overbought with divergence at resistance after a run of 90%. Okay, so for solar and some others I mentioned in the trading room today, I'm looking to probably short some of these for a pullback trade. Ideal scenario for solar, I think it's going lower and it has good support around this area here. So if you want to recycle in, maybe that's an objective long entry. Maybe it goes a little bit lower. But I'm looking for, some downside here. And, remember, these guys move pretty big. That was, ran up 90%. It could easily pull back here 15% or so, which would be a quick trade. And if the sector pulls back, it'll probably pull back pretty quickly. I already covered that one. I think one or two more in that post from April 4th. YGE is the only other one that didn't play out that well from the post. It did actually play out a little bit. What did I say here? Pull back, it offers an objective entry. It was breaking out of that yellow downtrend line. Let's see, that was back in April. It was 294 YGE. That was it right there. Yeah, that's it. There's the breakout, and it ripped. It ripped up about 23%. Then it reversed. So, you could have got the quick pop. You could have set your stops at break even or raised them and made a profit, but that one and came in to make another divergent low at this point and then has rallied since there. So that one still appears to be bottoming. And again, that's a common theme. The sector appears to be bottoming. So longer term bullish. But if you're planning to ride out the pullbacks from these overbought conditions, I can tell you they will almost certainly measure in the double digits in a lot of these stocks. And if you're comfortable with that, great. If not, just either take profits now or tighten your stops. Okay, let's just look at a few more and we'll wrap it up. I'm going to go through when I did the video shortly after that April post on those stocks. I did a video covering all the flag stocks here, I believe, and I just want to cover those. Most of these I've already covered. I'll just go over these now in case I missed any. JKS, here's one. It's coming up that previous reaction high, extremely overbought. I mean, very overbought. PPO is turning down. This looks like a buying climax. See this surge here? You had a buying climax right here. I'm referring to these large volume spikes. And after a buying climax, you typically see a pretty sharp sell-off. That one dropped 23%. And I would expect a pullback of, around the same scope, maybe a 20% or so pullback from current levels. That one's getting lofty. I certainly wouldn't chase it. And does that appear like it is certainly consolidation? Does that appear like flagging action? Possible. Look for an upside break. If you see an upside break and it fails, then be careful. So if you want to play it on the long side, an upside break, set your stop, just below the flag, because if it breaks out of that flagging type pattern, that pennant type pattern, and fails, that'll be very bearish. Again, one I just wouldn't chase. The risk reward just isn't there for me. Run. This one looks like it's ready to be a short. This was another one I covered, and you can see the divergent high right here, negative divergence down there, and stock at resistance. So you might have I didn't mean to put that one there. You might have a sell signal in place already. You have a minor uptrend line here and a breakdown. It failed at this resistance level. It's just below it right now. So pull back to the 635 area would be my target. And, not a bad swing trade, especially a quick trade if you can get it. It's about a 13% pullback. SEDG I already covered. SCUNEQ, that one hasn't done anything. That's a penny stock, never broke out. There was a pattern, failed to break out. CAFD, I covered this one as well. Divergent low, it must have been covered back in April. It's had a heck of a run, about 28% or so. It had this pennant pattern, but it failed and broke down below it, and it's also below this resistance level. So again, this one's looking like it's out of gas on the run. Sorry, I keep grabbing the wrong drawing tool here. There's your trend line. So here's your sell signal. Just set an alert. Boom. If it breaks below that trend line, This one's probably going lower. VSLR, that one would have been covered too. These were the levels I believe I had highlighted here. Break over 320. That took us up to that first target at 370. That was for a quick, very quick 16% gain. Then it took that level out. Appeared to be flagging, but it's fallen out of that flag. So again, these guys just got, it's too much too fast. They look to be overbought. SKYS never took out the downtrend line. That one's still down there. TERP did take out this downtrend line I had highlighted recently and it's rallied about 7% or so. It looks to be flagging right now. So just based on this chart alone, you zoom in, there's some flagging action right there. And here's a flagpole. So that would take us up to that target. And it is possible if the majority of the solar stocks fall that some can do well on their own. I'll say this, there's not as high a correlation in the solar stocks as there are some other sectors. For example, you take GDX, all the miners, almost every single component of GDX has a very high correlation. If GDX is up 5% of the day, I can assure you most, if not all, of the mining stocks are up. And likewise, if it's down. Solars are different. You have all different, I'm not an expert in solar, but I know some companies make solar panels, some make chips, some make all kinds of different technologies that go into solar energy. Some of the stocks in this list are even, utility companies that do a lot of solar energy. So again, there's a lot of diversity amongst their business models within the sectors. So you can see some doing better than others. So there's TERP, potential bull flag, and maybe it pops up to that target I have there. SPWR already covered. GLBL. It refuses to break above this $5 level so far convincingly. I mean, couple little ticks above it. You probably have to set the your resistance line, your buy trigger just above there. This one must be, maybe it's a buyout candidate because it seems to be the prices are compressed. So you check the news on that. If there's a pending offer for an acquisition, it's not going to go anywhere. Usually that's what happens when you see prices flatline like that. HQCL I already covered. VNPTO. I covered this one here as a breakout of this triangle pattern, and you talk about a run. I mean, this thing's gone up 80-something%. Divergent high right here. You can see the negative divergence, and it started to come back in already. I wouldn't touch that one, really. It's not something tells me to stay away from that one. CSIQ, I think I already covered this. Yeah, there's that divergent high. I covered that one already. Only a few more here. RGSE, I think I covered that. Yeah, that's the one that just never broke out, never went anywhere. Didn't have an impulsive breakout. There's JSAO. Broke out of this bullish falling wedge right here, this wedge pattern, which is also defined by this longer term downtrend line. It's coming in, looks like it wants to make a back test of the downtrend. I mentioned this one in the trading room. The one thing giving me pause, the reason I would not buy this back test, normally I might, first and foremost is my outlook on the sector near term, but I don't like the posture of the PPO. This is in bearish territory when the PPO is below the 0 line, that dotted line, and it's turning down. It just crossed lower. So that's a bearish posture. I'd rather see it pop up, PPO get above here, show us the trend is up. So maybe a successful back test, wait to see it first, and then wait for the stock to come in and take out these two reaction highs right here. I didn't mean that to be an arrow. I meant that to be a line tool. All right, clear that out. It's trend line alert on CAFD. I must have just set that one. Yep, so we broke down. I just set that alert while we were doing the video. YGE, I think I already covered that one. I sure did. And TAN, I started out the video, I believe, with TAN. There's that, we're at resistance. TAN is the solar ETF. So when you have this sector ETF at resistance and overbought, again, the momentum's there, absolutely, but the risk reward is not worth it. That's about it. There's another one, BSRC, a couple downtrend line breaks lead to little pops on this, and then there were a few more. ORA, negative divergence here. You can see the divergent high, divergence right there at that point. It started to correct. I don't have much of an opinion on that, but I think it looks toppy to me. ABY, this one was an official trade idea back last in 2016. Hit my first target. We were stopped out. After hitting the first target, it literally clipped the stop by 1 cent. and then went on. And at the time when I posted an update, I said if you're a longer term investor, it still looks good. You can enter at that point if you're not already long. And that one from there went on to continue to rally another 45%. This is a utilities company, and they must have a good deal of solar in there because I have it in my solar watch list. WNDW, big, large, symmetrical triangle pattern, still working its way in. Be bullish to see a definitive upside break of the pattern here. Wrong tool. Upside break, and obviously bearish to see a downside break. So just one to watch. I'm just throwing out names for you guys to add to your watch list if you're interested. DQ, this is not Dairy Queen. This is DAQO, New Energy Corp. It really looks to be, consolidating here in this big range. So far, we've had virtually 3 failures there. But this one can go either way. If probably favor an upside break. It's longer term, the sector looks good, but you have to see it. You have to see that uppermost trend line. These 2 reaction highs, this trend line here, horizontal line about 2770. That needs to be taken out. Meanwhile, if you want to trade it within the range, you short at the top with a stop not far above, and then cover at the bottom of the range. That's been the the pattern that it's been moving around in. And there's also a midpoint, and that there are a couple resistance levels within that channel. Sometimes that's where it stops, and you may also find support there. And last one, and we are finished. EMKR. EMKR. Well, I had mocked this up before the chart, before the video today, to highlight as a bearish one, and I hadn't covered this one before. You can see negative divergence here at this point and negative divergence here. So this is one large divergent high right here at this point, and we had broken this uptrend line, came in and back tested, or almost back tested, and then I had this yellow trend line that I was going to highlight today as a break below being bearish. Well, this one must have had earnings or something. I started this video before the market opened or right after. Hadn't seen that, so huge down day today. And there it is. There's technical analysis for you. You can see my targets. I had 2 targets identified in advance. This level and this level. So what happened? We went as low and reversed just above this target here, and we still may get there. Then we snap back up. You can see this big giant hammer, this candlestick. Prices have now snapped right back up above that 990 level. We're at 1002 right now, and that's how technical analysis works. So if you had shorted this one in anticipation of a breakdown, sometimes I will short if a wedge is so clear and a breakdown looks imminent. I'll establish a short position within the wedge. You could have had a buy to cover order just above the bottom there, just above that support level, or one right there. You would have had them both hit. So now, where does the stock go? Is the correction over in one day? Certainly possible, because as I say, stocks can correct in either time or price or both. This one actually corrected in price, not time. In a single day, it went down, dropped from where it closed yesterday. At the lows, it was down 23%. So that has certainly worked off the overbought conditions, the negative divergences and all that. However, rarely do you see one and done like this. More than likely, you're going to see this stock come back, test this level again, and if it breaks below, then it may continue down to 834. And if it holds that level, then that's bullish, and maybe it will continue higher over time. All right, this has been a long video, but I covered a lot, and I hope you guys find these useful. This has been Randy Finney with Right Side of the Chart.